Today, we will be talking about XLM and XRP and tie in Velo and XDC too. And that is because we have had a lot of announcements regarding gold. Texas has officially recognized gold and silver as equivalent to fiat. And over the last 2 years or so, that has been picking up a lot of speed in just about half of the states in the country. And I am talking about it today because as of July 1st, 2025, physical gold is classified as a tier 1 asset per Basel III regulations, which mean it is a 0% risk asset, which is equivalent to cash and bonds, which is essentially implying that we are one step closer to a truly asset-backed financial infrastructure. And if you recall, I talked about Wyoming a couple of times, and recently I was able to find even more connections into the PayPal Mafia, which is pretty much 95% of everything I actually talk about at this point. And that is important because Wyoming is quickly approaching recognizing gold and silver as legal currency, which goes right back into Wyoming's stablecoin beginning to come online, and the technology providers and companies are continuing to be chosen. And even though Layer 0 has been the only crypto company and network to be called out in that at this point in time, they are chosen as the interoperability provider, essentially. And with Stellar being one of the final contenders, and with how much they have talked about it over the last 12 months or so, I wouldn't be surprised to see them included in the final Wyoming stablecoin infrastructure, which also ties right into what we are talking about right now and how physical gold is becoming even more important. And a lot of that ties into a topic that I have talked about in the past that revolves around Kinesis, which is a physical metals company that is tokenizing it on a network that is a fork of Stellar. And here is a little bit more on how these kinds of utility assets can come into play in a truly asset-backed financial infrastructure.
A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic.
And that is important because in the 1970s, we moved away from a gold-backed infrastructure entirely. So there is a little bit of confusion, and I am not an expert on this topic at all, but we are really just talking about the 0% risk change as it relates to gold, not the high quality liquid asset part. So that is a topic that I don't really understand at this point. I don't really intend to get too far into that, but we will actually talk about the NSFR here in a little bit. So yes, as of today, it is a 0% risk weight, which is equivalent to cash and government bonds, which it was previously a tier 3, which required a 50% valuation discount. So if you had $100,000 in gold, you were only able to count $50,000 of that. So the big picture here is that this changed U.S. institutions to count physical gold at 100% of its current market value toward their core capital reserves. A few months ago, I was talking to a contact of mine, and they performed a lot of their own research and used AI to put together the framework of a thread in order to summarize all of it. So if you are interested in that, it's got tons of information here. It's got sources on a lot of it. And I just want to call out a couple of points here. So it is changing the fractional reserve gold trading of an industry or a practice or even an economy, just because it was so highly manipulated and it created a lot of value for a lot of people that didn't exactly exist. So it will increase demand for physical gold as a direct result. And to just skip over a lot of the individual posts here, and if we go right into the conclusion, today is the start of a huge change. And that is primarily because it will take away fractional reserve trading and it directly increases physical gold demand, which really ties in with how central banks have been stockpiling gold. So I won't play this video here. It's extremely long, and pretty much every time that he talks, it is extremely scripted and it's not exactly very engaging. But we have seen a lot of trends on how the US is preparing to monetize its natural resource. With these crypto, stablecoin, and market structure regulations coming out here soon, and with how we have encountered a huge explosion in the real world asset tokenization industry, it's all really coming together at this exact point in time. So to get back to how this involves Stellar and a few other specific cryptos, we will be talking about some specific projects with some specific companies that have been tokenizing gold in a big way. And when you are able to tokenize physical gold, it's a lot easier to transact. And if you are able to tokenize that, then you can have a lot of other assets on chain that can reflect that value and bring even more value on chain. The really interesting thing about Kinesis, which goes right into Stellar, is that they have a lot of history with Stellar. They actually chose to create their own network and their own tokenization infrastructure on Stellar and created it in a way where they wouldn't be able to manipulate prices of things with the tokenomics alone. And there are a lot of really significant companies and institutions involved in this. And a pretty interesting one that has a lot of ties into Stellar is MasterCard. They are also associated with XDC. However, they clearly call out Stellar as their blockchain partner and provider. It was a few months ago now, I talked about how Kinesis was speaking clearly about how Russia was tokenizing gold on Stellar. And there has not really been a lot of talk about that. However, it did line up extremely well with a lot of the other BRICS and Project Enbridge content that I have speculated on. And specific to the Russian tokenization of gold, one of the major institutions involved in that is Bors Stuttgart, and I'm sure I didn't pronounce that right, but it's interesting because they also have ties into SBI, which has ties in to XRP and XLM and even XDC because of their different associations. So apparently my screen recorder stopped working and I lost a good chunk of what I originally said, but at this point I just want to talk about some of the different companies that are tokenizing gold, which not only makes it able to translate that real world value on chain and makes it a lot easier for institutions to work with, especially as we move into this new blockchain financial infrastructure. It also makes it easier to actually purchase and own it because you don't have to just purchase one entire gold coin or a gold bar or one physical unit. That one physical unit can be tokenized into 100 parts, 1,000 parts, a million parts. It just makes it a lot easier for people to transact with real world physical value. So Comtech is a commercial company that is tokenizing gold on the XDC. Meld is a company that is tokenizing it on the XRPL. However, as we get into the more potentially or likely institutional end of things, especially as it relates to Project Enbridge and BRICS, Velo has been talking about their involvement in the Laos Digital Gold project since mid 2024. And with the Velo ties and the different smart contract platforms and the different companies that they're involved with that actually create the Velo network and the infrastructure itself, it has a lot of commonalities with the technology that Project Enbridge actually talks about. And on top of that, they are created on top of Stellar. So that one is one that I think could have a lot of high value potential. However, as we get back to Stellar, which is really what we are talking about here, especially with the Kinesis element, Paxos Gold is probably one of the top physical gold tokenized coins out there at this point. And that's really because Paxos is so focused on regulatory compliance. They're working with Stellar, they're working with a lot of other people. However, their involvement with Stellar is particularly important because not only are they working with Stellar to launch stablecoins, they're working with a lot of the PayPal Mafia payment processors as well. They're working with PayPal and Stripe and a few other things that I don't have prepared off the top of my head. But that is one that I am particularly interested in, and how they are so involved with the US soon to be regulated blockchain economy.